Hello, Chris. How are you today
¿Cómo
again?
estás, Anita?
Good, good. Thank you. Thank you very much. It's always a pleasure to do this with you.
I always love doing it.
And let me tell you something. Remember this last video that we did together, this webinar? We have 58,000 views on YouTube. So that means that
Oh,
a lot
wow.
of people are still searching on how to improve or fix their credit, right? And today's webinar, we want to give some advice to people, educate people, consumers on today. We are on a buyer's market, even though this issue of the credit is not only for real estate, it could be also for a car loan, or somebody wants to get a personal loan or a new credit card
Business
or
to a business
any
loan.
business. So they need to have a good credit. But if we concentrate, let's say, because my job is I'm a real estate broker and I want people to be able to buy because today is a buyer's market. Let me ask you, so you can introduce yourself to our consumers on what do you exactly do on how to advise people on the credit and also on helping them save money on debts that they probably are overpaying, correct?
Yes. So the biggest thing here in the United States, Anna, is that there's no education on credit and finances. None. And there will never be. So people are like, I wish they would do this in high school. I wish they would do this in college. They'll never be. Because the United States of America runs on debt. We are a nation of debt. The more debt we have, the more the economy produces. The more debt we have, then they get to sell off that debt to investors and then they make money. So the education will never be there. They're banking that we overpay for everything so that other people can make more money or have more jobs, right? Because if you're consuming, then you're buying items and then people have to produce those items. It was almost like when COVID hit, that everybody got the free money, Anna. Everybody got the free money because the government did not want the economy to stop. So if you give this money out, people will feel confident and start buying items or investing, right, into things. And a lot of people went crazy buying very expensive items, and we here in South Florida, we took advantage of it because all these people from New York, Seattle, all these people, Denver, that they wanted to move down, they were able to buy houses over here, larger homes than what they had over there for much cheaper price, right? So we took advantage of that here in South Florida, but our South Floridian residents, they got into big time debt, big time debt. And we're talking about credit cards, Anna, like through
They max the credit cards, they get new loans, furniture with credit. They buy a lot of things, appliances, and they buy appliances with a credit, so they have another debt. But today,
automobiles. Right now, Anna, to give you a shocking number, and I think you and I can relate, to with this because we've been in business for a while. The average automobile payment, average. I mean, average means a Honda Accord, Toyota Camry, nothing luxurious, right? An average automobile payment now is $718. When
correct.
before, Anna, that was a Mercedes Benz, that was a BMW, and that was something crazy that you're like, oh my God, what a luxury. So now, if that is so expensive and people are accumulating a lot of debt and the wages are not going up, how can you survive? So this is how you see people making $100,000, Anna, and still live paycheck to paycheck because everything has gotten so expensive, or they bought very expensive items that now are not worth it and they're stuck with it.
Exactly. And we are going to talk about this real estate market today, that it's hot for buyers, right? There are a lot of opportunities for buyers to get a new house at an affordable price because there are a lot of properties for sale, and sellers who want to really sell and they are motivated to sell, they're lowering the prices and they're giving buyers even help with the closing costs. So today it's a really, really good time to be a buyer. But we are now having this problem with credits, with debts, with people that think that I'm not going to be able to buy a house ever. And they don't prepare themselves. I am talking to people right now where I say, okay, listen, we have to start preparing to buy a property maybe in 1 or 2 years. The credit repair and the credit, all this, you know better than me, it takes a long time because there are a lot of things. There are people that have judgments. There are people that have a second mortgage, and people that have, you name it, on their credit, repossessions of cars or whatever. And so we need to educate people on how to start. Okay, let's sit down. Let's see your credit history. Let's say your credit report and see how we can help you improve your credit, get a good credit score, advise them on how to lower debts and maybe refinance something that they could have and improve their credit. So in 1 or 2 years, they're going to be able to buy. So how do we work with people? What is your advice as a credit advisor and now a mortgage lender, a mortgage broker? How do you advise people on how to, improve your credit? I always tell them, listen, don't do it yourself. It's going to take you forever because this is a procedure. Nobody knows how to do it better than someone that has experience and works on improving credit.
Item number one, Anna, is stop using your credit cards. Stop it. You gotta stop using your credit cards. You gotta go in a debit card diet. As simple as that. You gotta go into a debit card diet. You cannot consume. You cannot. Because how can you be trying to get out of debt when you're buying more and more and more? Right? Then also, you need to look at where your money is actually going. What are the necessities? Are you overpaying for items? Like I have a client right now that needs to put some tires in his car, but his business is not doing so well. The tires that he always puts in his car are about $2,000. I told him, I said, you need to find some tires that are a little bit cheaper. You have to find a way. But also, you need to identify where the problem is. Because a lot of the times, Anna, and this is what I tell my clients when I look at a credit report, I can fix something from the past, a mistake, a late payment, something from the past I can fix. The only thing I cannot fix is money problems. People don't have credit problems, Anna. They have money problems. So if you didn't have money problems, you could spend $10,000, $20,000, $30,000 a month. And if you could pay it off, you're always going to have great credit. But it's the money. When you don't have the money, that's when you get in trouble. So yes, looking at the credit report is very important. Understanding the debts that you have are very important. Seeing which debt you can minimize. So for example, I'll give your audience a super advice. And this is a free advice, guys. You could contact each creditor. So each credit card company, you could contact them and ask to speak to the hardship department. Now, this is a department set up perfectly for customers that are having financial difficulties or will have financial difficulties. What this department will do is that they will freeze your account so you cannot use that credit card or that loan, right? They'll freeze it. But also they will lower the interest rate, Anna.
Oh,
to a very low, yeah, they'll lower to a very low rate. And they'll tell you, Anna, you have 12 months, you got 24 months, or you got 36 months of this break, start sending payments.
And
So
they
now,
will not, if they don't go with the agreement, of course, they're going to report it. Otherwise, they will not have a bad report on their credit.
correct, because you already made an arrangement with them and you're paying them. So this actually helps you still maintain that relationship that you have with that creditor, but also now you're eliminating or reducing your monthly debt that you have, right? Because everything's about cash flow.
Correct. What about people that have 6 credit cards and some of them are maximized, some of them are not? what do you recommend? Because a lot of people say, hey, do you think I could get a loan and pay all the credit cards and just have one payment to make every month? Or what is the best thing to do for me to start lowering the credit card? Because if you pay the minimum on each credit card, you're never gonna be zero. It's
I know.
always gonna be
Usually,
max.
right now, what I'm looking at, what I'm seeing in the financial market is that banks are in very shy with lending. If you don't have a 700 credit score, the banks do not want you. If you're so maxed out with all these credit cards, why will somebody take that responsibility and say you're going to be my responsibility? Banks are risk adverse. Banks, they want to give loans to people that they know they're going to get their money back. So if you're having money problems, so people think, oh, when I'm having money problems, then I'll ask for help. No, you got to ask for help when you do not have money problems. So getting a loan right now is not going to be advantageous. Or if you do get a loan and the customer has bad credit, right, to pay off their credit cards, that loan may have a huge interest rate as well. So you're really not doing a lot for yourself. So at that time, for this case, I will say start paying off the smallest credit cards first, the ones that you owe the least amount. That one you concentrate, start sending more money to those. To the larger ones, you send the minimum payments. And once you pay off the little one, then you move to the second small one. Then you pay off that one, then you move to the third small one. So it's called the snowball effect. That right there gives a lot of people a lot of help and a lot of support within themselves and motivation because now they'll start seeing that their debt is being paid off, but also they will start seeing their credit scores increase. So once they do that, then they'll be like, okay, I really don't need these credit cards because I already learned how to live with a debit card, right? And people say, but I stopped getting points and my credit score is going to drop if I don't use credit. Well, your credit score already dropped because you used too much credit.
Mm-hmm.
Now we got to better it. So you don't get credit just by adding debt. You build up a high credit score by buying something and paying it off.
Mm-hmm.
So people think it's just by getting into debt. No, you lower your credit score by getting into debt.
And this problem, we don't have it with only with people that make a lot of money on their salary. First-time buyers, people that are maybe low-income people, they also have these problems with the debts, and that's why they're still, not able to, for example, purchase a property. So how can we educate first-time buyers, people that never had a property before, and they think that it's very, very rare that they will be able to buy one? But I always tell them, listen, we can always try first buying a small house, even though
Yeah.
maybe you don't like the location or maybe it's smaller than what you really want, to build equity on the property, right? Because if you rent a property, you're paying the landlord's mortgage. You're not making any money. On the other side, if you buy a property, even if it's small, you're building equity. And in the few years, you can probably put that for rent and get it as a rental income and buy a new one, or maybe sell it and buy a bigger one or whatever you're looking for. So how you advise, what would you tell first-time buyers that think that they will never be able to get a property? What do you advise them, so we can see their credit, and how can we help them to improve it and to get more, more credit and better credit in order to be able to buy a property?
So my first advice is to let them know so that they can understand that by renting, they're paying 100% interest rate.
Correct.
100% interest rate because they don't own anything. So they're
Mm-hmm.
making someone else rich. That's just number
Correct.
one. Number two, to buy something, cannot have a lot of debt. It's called the debt to income ratio, DTI. That in the mortgage industry is king. Because as a mortgage advisor, I need to know that my customer can pay for that loan. It's called ATR, ability to repay. So
Mm-hmm.
if the customer does not have ability to repay because they don't have high income or they don't report their income, Happens a lot over here in South Florida, right? Or they have too much debt. Then you will never be able to buy. You'll be a renter for life because you chose that. And I see that a lot, Anna, in Miami, where you see an apartment or a townhouse and you see a super expensive car.
Mm.
Those people are
I see
renting
it.
those
I
apartments
see it a lot.
and they will never be able to buy because now that 1,000, 2,000, there's a Cadillac Escalade. And a friend of mine, where he lives in a townhouse, that Cadillac Escalade is $2,500 a month. The rent in that townhouse is not 2,500.
Mm.
So how can this person qualify to buy that townhouse if he has such an expensive car? So my advice is like, okay, let's look at what we can afford with our income. Sit down, client, with a trusted realtor like Anna, because a lot of realtors, they do not know how to formulate and put a deal together. Yes, they could show you a house, they could tell you how beautiful it is, but to put the deal together is difficult. Sit down with a mortgage professional. I would love it to be me, but if it's anybody else, sit down with a mortgage professional. Let them look at your income. Let them look at your tax returns. Let them look at your credit. So then they could tell you, okay, Mr. Customer, based upon all these figures, you qualify for a 300, 500, $800,000 house. And now Anna could go and get that property for you, the best one. But Anna, you said it the best. You need to start somewhere. I remember my mentor, when I first bought my first house, my mentor told me, Chris, your first house is not the castle.
Mm.
The first house is your first house that you're going to grow in, you're going to learn from it, and hopefully you make a little bit of money so you buy your second house.
Correct.
And then maybe the second house is the investment, or the first house now becomes the investment property, and the second house is your primary.
Mm-hmm.
You need to start somewhere. Where I see a lot is that people want the castle, number one. And if they cannot get the castle, they rather rent a castle or what they think is a castle, but rent. And I think it's the
Mm-hmm.
long run move. We've seen it now, Anna, how prices continue to increase in real estate, and they will continue to. I just did
Yeah.
an open house right now with a friend of mine, a little house in the Gables, $1.5 million house, a 1,700 square feet, Anita, like, you know, small house. The neighbor came to us. And he's like, I bought the next door in 1975. You know
Mm-hmm.
how much I paid for that house? I said, no, senor, how much? He goes, $40,000
Mm-hmm.
in
Who would think
1975.
that if that many years afterwards,
50 years later, it's now 1.5.
correct, he
That's a
built
lot of,
very good equity.
but that's a lot of equity to pass on to your family or to live
Mm.
off. But if we're renting, always renting, and I just mentioned the Gables just because I just came from the open house, but we could get somewhere, a house anywhere, Anna,
Mm-hmm.
and start building your portfolio. So going back to that question, what would I tell the clients? Don't get into debt. Speak to a realtor, speak to a mortgage professional. Do not assume. So a lot of people assume, I don't have the down payment. There's down payment assistance. I don't have the down payment. Maybe your 401k, we can borrow from your 401k to buy a house. There's so many ways. Like you said right now, seller contributions. I'm seeing that so much right now. Seller
Yes,
contributions.
especially today, Today, since it's a buyer's market, we can get a lot of help, uh, from sellers, sellers contribution. We can also, Miami-Dade County has programs to help people to buy their first home, and they help you with closing costs or for down payment. So there's no excuses today not to buy a property and be a first-time homeowner or second homeowner, whatever. There's no excuses right now other than, wanting to do it, right? When you really want to do it and you have the drive, then let's sit and talk.
I think people have to want Anna, but they're getting advice from the wrong individuals.
Correct.
Right. So when I came into the mortgage business, I asked my broker, I said, when do I have a conversation with the client about a mortgage? He goes, when they think that they want to buy. They
Mm,
may want to buy in 6 months. They may want to buy in a year. We start having that conversation with them now. We start looking at their documents now. We start looking at their bank statement. We start looking to see where we can help them out. So once you start having that thought, it's almost like I always thought about this, Anna. When a realtor goes and helps someone get a rental property, usually a rental agreement is a year, sometimes it's two, but most likely it's a year. Right there in that year, that customer should start already looking and preparing themselves for a mortgage. Because if that place, the landlord does not renew them, you have to come up with first payment, last payment, security deposit. It could be a
mhm.
large number. It could be the number that you needed for the down payment or a
And then you
percentage
cannot
of it.
even do repairs in the property. You cannot paint it the way you want
Yep.
it. You cannot do
It,
any alterations to the property. But what you just said, it's so true about people getting advice from the wrong people. And the other day I was doing my manicure and I listened to the people, right? They talk and talk and talk, you know how these people are. So they were talking about real estate and I listened to this
the
hairdresser
hairdresser.
and she said, oh, my friend said this and this and this. And I was listening and I said to my manicure, I don't know who gave them that advice, but it's so wrong. And they're going to be making such a big mistake. But I'm not going to say anything because I'm not their realtor. I'm not
Yeah.
a people that have, I'm not going to get into a conversation that is not mine. And when people ask me for advice, I try to tell them, to give them a good advice, or listen, why don't we sit at my office and we have a better conversation than in the hair salon, because this is not a place where I can give you advice. And since they are not working directly with me, I try not to give advice, like any
Yeah.
attorneys, right? They're not going to give
Yeah.
you any advice unless you sign something with them. So the same way, let's meet at my office. You don't have to sign anything, but I can give you some advice in my office. Sit down, let's see your income, let's see your debts, let's see all this, and see if you're able to buy now, or we can start preparing for it. But people, yes, they get advice from people that have no clue on credit or on, it's unbelievable.
It's- I-
People talking and talking and talking.
And it happens a lot in our community, Anna, of our Latin community that you and I are Latin.
Yeah, we are people that
Um,
like to talk.
and also it's like I hear all the time, like, no, the more credit cards, the better your credit score. I said, no, no. If you have the best three or the best five credit cards, that's all you need. You don't
I
need
learned so
more than
much
that.
from you, Chris. All these years,
Thank you.
I learned so much, with you. And I'm gonna say it because it's not embarrassing or anything, but you fixed my credit back in 2009, and because we all went through a very bad crisis, right? And it
The
touched
financial
me
crisis,
also,
the
and
real estate.
I was involved in that crisis as well. So you helped me so much to understand how to get a good credit score. How many credit cards do I need? I have over 800 credit score right now, and I do have debts. I pay them off at the end of the month. I don't
Mhm.
pay any interest. The only debt that I pay interest is my mortgage. That's all. The rest of the things
And a
I
low
don't
one,
pay
and
any.
a low interest rate.
No,
Very
because I bought it
low.
20 something years ago. Correct. But we still have properties, investment properties, that have a little bit more probably percentage of the interest rate, but it's okay. They rent it out and they pay themselves with a credit. So but I learned so much, and this is so important for people to understand how this works and educate them. And as you said, no, nobody teaches us accounting or finance or anything in high school, and it's very tough.
I would say, Anna, just, to give probably the best advice is, and I say this all the time, debt is the killer of dreams.
Hmm.
That is the killer of dreams. You could have the best dreams, but if you have debt, you will never achieve it. So you gotta look at your debt. You gotta look at how much money you have coming in. You need to be saving. And where I would like all my clients to at least be saving is at least 20% of your take-home income. If you're saving 20% of your take-home income and you could still pay your mortgage or your rent, your car payment, right? And then all the other little stuff, you're doing well. That means that you're managing your money pretty well. Now, there's some people that could save a whole lot more. I have a dear friend of mine that she was a client of mine. She's a realtor as well, that she has already in savings every year the full year payments of her mortgage.
That's excellent.
And she also has 1 year of payments of her car saved already. And she goes, I cannot start January 1st of that year and not have everything already in my bank account for next January.
Someone that is a realtor and make good money maybe, but people that are, they don't have that salary probably, right?
But
they can still save because they can save $20 today, another month 50, another month maybe 70, another month 50, and everything adds up. At the end of a year, how much is it? If they people pay $2,500 a month of rent, $2,500 a month of rent, how much is it in 2 years? They already have the down payment for a house.
yep.
Or they have already equity on their property. If they put that money on their loan payment for a mortgage payment, they already have equity on their house instead of spending that money on rent.
It's all about habits, Anna. So yes, this young lady that I just told you, she's a realtor. She does pretty well, but when she started in the business, she was not doing well.
Oh no, of course.
She was not doing well. But it's all habits, little habits. If you save $20, if you save $100, if you save $200, it's all habits. And that's when I'll be able to promote having these good habits so that in the future you have this money. Speak to a CPA, to a certified public accountant, that's going to show you how much money is really coming in and how much money you spend. I see it all the time now as a mortgage professional. People are telling me I make $200,000, $300,000, and when they look at their tax return, they're saying that they make $10,000, Anna.
Yeah.
How are you going to buy it like that? You know what I mean?
Yeah,
So it's
because
like
people that
it's
work,
getting the
that
right
are
advice.
self-employed, they put a lot of expenses on their income taxes because they get a K-1 or a 1099. So they put a lot of expenses so they don't pay taxes. But at the end, that's not good because they
That's
cannot
not
buy
good.
anything.
Correct. So people, I think, try to outsmart the system, Anna, and that's why they get into a lot of trouble. They try to
Correct.
outsmart the system or spend money that they don't have today, thinking that the money is coming tomorrow. And we have been tricked with that. That's how they trick us. And they do a great job.
What about people that have low credit score, but because their credit cards are over certain percentage of the balance, what is the recommendation from you for people to get to improve their credit because they have maximized their credit cards, other
So,
than if they have a lot of credit cards and you start paying the little one? But what is another advice that you can give them in order to improve their credit?
so lower that balance to a 25% of what they gave you. So let's say if a credit card company gave you $1,000 credit card, you can only have 25%. So that means $250 in that credit card. If you go above that 25%, your credit score starts dropping. So you can never use more than 25% of what they give you.
See, we have a lot of tips, guys, and this is so important to have someone that knows about credit, have been working in this business for so many years, have
25.
helped 25 years. I've been in the real estate market for 24. So we've been in this business and we saw everything, right? Ups and downs in real estate, ups and downs in the economy of the country. Today is a buyer's market. Today is a good time to start doing a new purchase on a property, even if it's an investment property or first-time buyers, or you want to move out of the one that you have now and move to another one. This is a very good time. And why don't we sit down? Chris' information is on the screen. My information is on the screen. And you're welcome to give us a call, set up a meeting. We can sit down with your credit and see where are you standing in order to buy today, or maybe in a few months, or maybe in a year.
Anna, when we started this conversation, you said it takes some time to fix, the credit or the finances. I'll give you even a bigger tip. If you follow everything that I tell you to do, after analyzing your credit. In 90 days, you could see 60, maybe even 100 points more.
That's a
In
lot.
90 days. In 90 days. But you have to be able to work with me. You have to be able to do the steps needed to get there. But the reason why I'm telling you this, it sounds like a big number, and it is. But let's say you get 40 points in 90 days. That's 40 points you didn't have before.
Correct.
And then maybe in 6 months, now you have 80 points more. And now you're preparing yourself for that mortgage. Guys, stop spending money on useless items. Look at everyone that has established a lot of wealth, stability. They own real estate because they know that by owning real estate, they cannot be spending their money on useless items. So they're very, very cautious on how they use money because they want to qualify for their next investment. Keep an eye of all those people that are doing well. You see them, Anna, dressed normal. They have a normal, nice car, nothing crazy. But now they have 3, 4, 5, 10 properties. And it's amazing. And then you see the people with the flashiest cars. They're the ones that are broke. So start the conversation early, guys. Speak with Anna as the real estate professional, myself as the credit or mortgage professional. We're here to help out, but there is hope. There's always hope, and there's a lot of help that the government needs to give to you, and you need to take advantage of them.
Excellent. Thank you so much, Chris, for having you again. This is excellent. I love doing this for our clients and for anybody, consumers that want to build their credit, even if they're not going to hire us or they don't need our services. It's a good tip for all the consumers. They can improve their credit and be able to get a loan for anything that they want, right?
Anna, and if we have some business owners that get to watch our video, they have, let's say 10 employees or more, I know that you and I could go and do a lunch and learn over there. We can teach them, the ins and out, how to look for a house or how to prepare for a credit, how to prepare for a mortgage. We have done those before. So that would be something cool. Business owner, if you see this video, you want to provide some employee benefit, I know Anna and I can get this job done.
That's an excellent tip. Okay, excellent. Thank you so much. It's a good idea. And I will send this video to all of my database and my clients and whoever I know that they could take advantage of it. And thank you again, Chris, for having me.
You're welcome, Anita. Bye.
Okay, bye-bye.